morning folks, this is Naeem Alsam, Chief Market Analyst at AvaTrade, and welcome to our daily fundamental video analysis. The equity price action looks bullish once again over the United States. As you can see in the chart, the S&P 500 index confirms that the upward trend is still very much intact as the index continues to make another higher high. And the all-time high, and secondly, the prospects of the index coming out and digging itself out of a black hole which was formed during the COVID-19 crash, the very recent crash I'm really referring to, which happened not too long ago, only last week. The index is still trying to come out of those losses, and I think it is likely for the S&P 500 index to become positive towards the end of this week if momentum continues at this current pace. When we are speaking of the Dow Jones index, it is still somewhat lagging with respect to the other two indices, because it is the NASDAQ index, as you can see in the chart, which not only crossed the previous high, but it is continuously making new record highs, and the momentum is very much driven by stocks like Amazon and Apple. They are the biggest gainers. They provide the biggest fuel for this NASDAQ rally to continue its journey to the upside. Now, what is really driving the sentiment for the US equity market is primarily the US retail data which came out yesterday. Obviously, the numbers were a completely blowout. No one were expecting for these numbers to be this strong, but that is what we received. And this confirms this particular element that yes, perhaps we are likely to see a much stronger recovery for the US economy than currently anticipated. Because remember, the continuous claim element, and this particular data is going to come tomorrow, is still very much elevated, is still above that 2 million mark. And regardless whether it is above 2 million or whether it is not, the fact is that the number is substantially high, and over 40 million Americans have applied for the continuous jobless for the jobless claim, meaning they are out of jobs, right? So that is a huge number, and then we want that segment of the employment to come back into the market and start working again. Of course, that is likely to happen as the economy continues to reopen over in the United States. Now, moving on and then shifting into safe haven assets. Gold prices are still well above that critical level of 1700, currently trading at 1723, and I think the momentum is still in favor of bullish price action. It is still likely to continue its journey towards the 1750 mark in the coming days or perhaps in the coming week, but that is only possible if the price stays above its 50-day moving average, or at least above its 100-day moving average on a daily time frame. A break of both of these two moving averages is likely to confirm that the price action is going to continue its journey to the downside, and perhaps only the 200-day moving average, which is in around 1670, may provide some support. That's all for today. See you guys tomorrow.